and welcome to my first ever YouTube video. This video is going to explain the investment portfolio tracker, and I made the link for this tracker available for download in the description below. And a bit about it, I've been trying to find a way to track my own personal investment portfolio, but I couldn't really find any tool that put all the tools that I was looking for in one place. So this works for me personally. It might not work for you, and you're more than welcome to change and make any adjustments that you want. But in this video, I'll sort of be going through a rundown of what this tracker can do. This tracker is mainly targeted towards long-term dividend investing because that's what I'm interested in. But it should work for just general growth investing. It might not be the best for day traders or stuff like that, but with a bit of tweaks here and there, I'm sure you can make it work for whatever you are interested in. So just a quick disclaimer before we start. I'm not giving any financial advice. I'm just sort of explaining the tool that I use to track my own investments and that you can use to track your investments. Something else I should mention is that this only works for Apple users because I'm using an application called Numbers. But if there is enough interest, it should be easy to make an Excel one. And if you guys are interested in that, you can just leave a comment below. And if there's enough interest, I can definitely make an Excel version of this. So I'm first going to outline the different pages. This page that we're on here, it's called the current portfolio. And it's basically just all the assets that I currently own. We're going to go into more depth about these pages in a bit. The second page here is the to consider page. And it's sort of like a watch list with detailed information of stocks that I might be interested in or that you might be interested in the future. Just sort of keep all the information in one place. And finally, there's the growth charts page, which sort of just tracks the growth over time. So let's take a look at each of these pages. We'll start with the current portfolio. So the first thing that you notice is that it's divided into a Canada and a US section. And this is just to help keep the difference in currency sort of, separate. I found that if I sort of mix stuff together, I'm getting a false sense of money because I'd see, $118, but if I'm just glancing at it, I might not know if that's Canadian or US. So for me, it just helps me to separate these two things. But then at the bottom here, in this table, we have a combined, sort of an area that combines both tables, and it's based on the exchange rate. And this exchange rate is actually updated daily, so it does all the calculations for you automatically. So let's sort of dive into this a bit deeper. So let's say, right now I have, one share of BMO at $118.32. Let's say I bought another share. The price was low, they give a good dividend. Okay, well, it's not great, but it's something. So let's say I bought another share. Okay, so I'm going to put 2 here. And then in this column, I'll basically do the average cost per share. So let's say I bought the second share at 117. The average cost would be somewhere around 117 and 60 cents, let's say. So I'm just going to update that 117.60 cents. And you'll notice that it updates these 2 rows here. So what I like about it is that it automatically updates. You only have to change a few things, and you come out of it with a whole new set of numbers. Now I'll explain how you add another share of another stock that another company that's not in your list already. But I'll first talk about the to consider page. So let's navigate over to that. Now it might look like it's very busy, and it is. It contains a lot of information. But for me personally, all this information is useful. And like I said, if you don't care about the PE ratio, you can always just remove that column and just consolidate your own table. But for me, what I like to see is I like to see the sector, because I like to diversify my portfolio. So, I like to be able to see what sector I'm investing in. So whether it's, financial, utilities, energy, transportation, healthcare, all that stuff, it sort of helps, seeing that I have a mix of everything. Now, I forgot to mention this, but this isn't actually my current portfolio. I just made this as a quick example to use for this video. The other thing that I didn't mention either is that this is actually all these numbers, well, for the most part, most of these numbers here are automated. So let's take a look at how that works. So let's say I want to add a new company. Let's say I want to, I'm thinking of investing in TD Bank. So to do that, we'll first start by clicking on these two horizontal lines here. And then we'll add the ticker symbol for TD, so that's TD. And then because it's a Canadian company, we have to add .to. So you see there, it automatically fills all these different columns for you. The average cost, the market price, cost basis, market value, gain or loss, or annual dividend. All these columns are automatically filled. Now the average cost, I actually did this for me because it helped. Because this is just a to consider page, it doesn't really matter what the average cost is because I'm not necessarily buying that specific stock right now, but I just needed that column for the other columns to be calculated. So I'll just say that this is financial, and I always just like to put 1 just to see what the numbers look like. And then over here at the dividend frequency, I like to get an idea of when the company is paying out their dividends. The reason for that is, if a company isn't paying their dividend for another 2 weeks, or sorry, not 2 weeks, 2 months, I might think twice about investing, specifically because, maybe the 1-year target in this case is too low. And obviously that's not a good enough indicator. You'd have to look at other stuff, the 1-year target, PE ratio, the overall earnings that the company is making. But let's say it's 2 months away and I think that the stock might go down, so I'll be willing to wait. Versus another company, whose stock might be 2 weeks away, and I think, now's a good time to sort of buy into this company, make some money off this, off the dividends, and just have it there with me. So that's why I like to include this. The other nice thing I like about the way that I set it up is that, let's say they pay out their dividends, starting in February. So if it's quarterly, it'll be February 20th, May 20th, and I'm just making up these dates, August 20th and November 20th. What you can see here is that May 20th was actually changed into the color green. Now this is because I'm recording on May 15th, and May 20th is within a 2-week period. So I programmed the table to change any date that is within a 2-week period to show the color green, and this just helps me to pick those specific stocks or the specific companies out and sort of assess whether I should be buying before the dividend is paid out, the ex-dividend date essentially, or if it's not a really good time to buy. And that's pretty much a rundown. I'm sure you can go through all these different columns by yourself. They're pretty self-explanatory. It's all programmed. Once you enter the ticker symbol, all these autofill, like the company name, the market price, the cost basis, all those autofill. And the gain and loss and the growth are automatically calculated based on the average cost. But like I said, I don't really care about this too much on the to consider page, so I just leave it at that. We can do the same thing with US companies. Click on the 2 horizontal lines over here. Let's say I want to add Procter & Gamble. I'll just do Procter & Gamble like that, and then I can fill out the sector. I think it's healthcare. Don't really know off the top of my head, actually. Pretty sure it's healthcare or consumer or something like that. That's not too important at this point. But same idea, it autofills everything for you, and same thing, you can fill out quarterly, and whenever their dividends are. One thing I should point out is that with AT&T, we got an error in this specific cell, And that's because their PE ratio is actually negative. So if it's negative, it's not going to show up. And I just made a note of that here. And this column here can be made for any type of notes. You can say, oh, this is a good buy, consider buying the stock soon, or maybe something like, you know what, I'll probably wait out, before buying this stock. And that's pretty much the basics of this page. So now that we saw sort of how to add a company to the to consider page, what do we do if we actually want to buy into that company? So let's say I want to purchase a couple shares of TD. I'm looking at it, dividends coming soon, the price is reasonable. Yeah, it might go down, but it's a bank. Even if it does go down, it's not going to go down by too much, and it'll come back up eventually. So I'm like, okay, I want to buy TD. So I just like to keep track of what I bought and what I didn't. So I'm going to click on this, or just check mark that side, that cell, sorry. I'm going to go to current portfolio. Same thing, I'm going to click on the two horizontal lines in this little circle, and exact same thing as before, I'm going to add td.to, and I bought one share at $86.53. So just like that, it automatically fills everything for you. It tells you your gain or loss, your growth, the annual dividend that they pay out, the annual income that you will get, and the percent that company makes up of your portfolio. Now, right now, these two numbers are the same because I only have one share. But with BMO, you can say I have two shares, where the annual dividend is $4.24. I make $8.48 because I have two shares. Now, again, this might not seem like a lot of money, obviously, $8 a year, but you can imagine if you have 10 shares of one company, that's $80, or I guess $40, sorry, times 50, 60 companies. That's good money. It's all passive money, and it's pretty much stable money. And I'll get into that a bit more when we talk about the growth charts. One downside that I should mention is that the market prices that you see in this column actually aren't live. They're the previous day's closing price. For me, this isn't really an issue because I buy for long-term dividend growth. So it doesn't really matter if if the price is off by $2 or $3. With long-term investing, day-to-day prices don't really affect overall performance. Now, I still obviously do check the real-time prices before I buy a stock because I might see 87 here, but it might have went up a couple dollars. Probably not likely with a bank, but you never know. So obviously, if it's something like 95, I might not buy, but I think you get the idea of it. And another thing here, and I sort of mentioned this table over here, the dividend income portfolio table, the combined one. It sort of just combines everything together, so it calculates the annual dividends here. It switches the US dollar, essentially exchanges the US dollar rate to Canadian dollars using the exchange rate, which is yesterday's exchange, or the last business day's exchange rate. And then it just tells you, what your cost basis is, what the market value is, and then based on that calculates the gain, loss, and the growth, and also just sums up the dividend and tells you how much you make a year with all your shares combined. So it looks like I make a whole $25 a year. Nice money. $2 a month. That's not even half of a Starbucks coffee. Anyways, let's go to the growth charts now. So you'll see two graphs here. One will show you dividend growth, which is on the left side, and on the right side, this shows you overall growth. I like to have overall growth in percentage rather than actual, numbers of what I ended that month in, because I think that it's important to see the percentages, because then you can go back and sort of assess specific stocks as to why, I was low. Specifically, in April, I tried to make this as realistic as possible. This is sort of around the time when the COVID market crash happened. So obviously -34, -20, reasonable, but then it went back up eventually, and it just helps me to visualize. Like, for example, in October, I see -10, and I'm thinking, why was it -10? I can go back to stocks, back to my current portfolio, and sort of assess what specific stocks are causing this -10 over here, right? Because they could be carrying their negative growth essentially over to the next months. So if the stocks aren't paying good dividends, I could just get rid of them, and that'll balance out my portfolio overall. Sort of with the dividend side of things, all I do is at the end of each month, I go into my monthly investing statement that you should get, with your bank or brokerage or whatever company you use to invest with. For me, I use Wealthsimple, so they give you a monthly statement, and in that statement, it has a breakdown of what you made with dividends, bought, sold, deposited, withdrew, all that sort of information. So I just take that number, add them up, because there might be a few different companies that paid out dividend that month, and I just put that in that table. You can see sort of with the blue in this chart on the left-hand side here. It does fluctuate, and the reason for this is because some companies pay quarterly, and if you have a total of 15 companies, 10 of them are paying quarterly, you're not going to see an even distribution of payments, right? You'll see sort of quarterly payments, so February, May, August, November. That's not the case here because I just made up these numbers, but that's nothing to worry about per se. What you can see here is that year after year, the overall dividend growth is increasing. So in 2020 January, I made $20, but in 2021 that was up to $25. Now again, numbers aren't super impressive; it's just made up. But you can imagine the difference if you're investing in a considerable number of companies and have considerable amount in your portfolio. So what I was saying earlier about passive income and constant growth, well, the reason why I like dividend growth is that even if the market is suffering like we saw in April and May of last year, most companies, mainly aristocrat and blue chip stocks, which are companies that constantly pay dividends year after year after year for multiple years and constantly are increasing their dividends yearly. Well, that's the aristocrat companies. Blue chip companies are just large, well off companies. So those companies don't really cut their dividends, which results in a stable income. So even if the market does go down, and it will, but it always comes back up eventually. So long term, it's not that big of a deal for me. And if you're into dividend investing, then it shouldn't be that big of a deal for you either. So that was pretty much all I wanted to cover. It was just a quick rundown of the tool. Hopefully it's all clear. And if it's not, feel free to leave a comment or reach out via email, which I'll have in the description box below, and I'll try my best to explain it. And if you're watching this video and you're new to trading and want to get started, I would recommend doing your research about all the different platforms, and banks and brokers that you can use to invest. I personally use Wealthsimple because I like how easy and user-friendly they are. And they also don't charge any fees for Canadian equity purchases. Now, if you're buying from the US, they do charge 1.5% fee. Including, I believe, obviously the currency conversion. And if you do decide to use Wealthsimple, you can use my referral link, which is also in the description below, for a $10 bonus when you deposit and trade at least $100. Thanks again for watching, and I'll see you possibly in the next video, if there is a next video. Who knows?